Here's a question for you. What if you could tap into the investment strategies of the most successful real estate investors in the world and use them to build your own global empire? That's exactly what we're breaking down in today's video. Warren Buffett, Robert Kiyosaki, Grant Cardone, Zell, and Jorge Pérez, these investors aren't just successful, they're legends in the real estate world. And today we're diving into their latest quotes and investment insights. But here's the kicker. Each of them has a unique approach to real estate. So, which strategy should you follow? Stick with me because by the end of this video, you'll know exactly how these real estate giants are navigating the international market and how you can apply their wisdom to your own investment journey. In this video, we're going to break down powerful real estate investment quotes from 5 of the world's most successful investors: Warren Buffett, Robert Kiyosaki, Grant Cardone, Zell, and Jorge Pérez. These investors have dominated global markets for years, and today, we'll look at how they're continuing to thrive in today's unpredictable real estate environment. Whether you're just starting out or looking to scale your portfolio internationally, these insights will guide your next moves. From market analysis to leveraging debt and navigating global investments, these strategies are actionable and designed to help you succeed. So grab a pen and get ready to take some notes. Let's dive in. Let's begin with Warren Buffett. While Buffett is widely known for his stock investments, his thoughts on real estate are just as powerful. His approach is grounded in long-term value and careful market analysis. Buffett is famous for saying, "The best thing you can do is buy a great property at a great price and never sell it." His real estate strategy focuses on long-term ownership, particularly in areas with strong economic fundamentals. Buffett prefers to buy real estate with stable, growing demand, allowing it to appreciate over time. In terms of international real estate, Buffett's principles still hold. He'd advise you to focus on countries with stable economies and solid growth potential, places like Canada, Germany, and parts of Southeast Asia. These regions offer reliable growth and demand, making them solid long-term bets. For global investors, Buffett's advice is clear. Choose your location wisely. Invest in property that will appreciate over time, and hold on to it for decades. Think of major cities with growing populations like Dubai or Toronto, where development and infrastructure are strong. While others may be focused on short-term gains, Buffett's strategy of buying and holding provides a stable, consistent return, especially in international markets. But while Buffett's cautious approach works for some, Robert Kiyosaki takes a much more aggressive stance. Robert Kiyosaki, the author of Rich Dad, Poor Dad, is known for his philosophy on leveraging debt to build wealth. Unlike Buffett, Kiyosaki encourages investors to take calculated risks and use other people's money, OPM, to scale their real estate portfolios. Kiyosaki believes that the rich don't work for money, they make money work for them. His strategy involves using borrowed money to acquire properties that generate positive cash flow. Instead of saving up large sums of money to buy properties outright, Kiyosaki teaches investors how to use financing to expand rapidly and build an income-generating portfolio. When it comes to international real estate, Kiyosaki's strategy is incredibly powerful. Many international markets offer high returns with lower property prices compared to the US or Europe. By using leverage, you can buy more properties with less of your own money, scaling your portfolio quickly. Emerging markets in Latin America, Southeast Asia, or Eastern Europe can offer incredible opportunities, and using leverage allows you to access those markets without needing huge upfront capital. Kiyosaki also emphasizes the importance of cash flow. He would recommend looking for international markets where rental yields are high, which is common in many regions where real estate is still affordable but rising in demand. Next up, let's take a look at Grant Cardone, another big thinker in the real estate world. Grant Cardone is a real estate mogul known for his 10x philosophy, which is all about thinking bigger and taking massive action. For Cardone, the key to success is scaling quickly and using leverage to maximize returns. Cardone's mantra is, "You don't need money to make money, you just need the right knowledge and leverage." His approach centers around buying large, income-producing properties like multifamily apartments using borrowed money to scale quickly. Cardone's idea is simple. Use debt strategically to buy large properties, and let the rental income pay off the loans. For international investors, Cardone's approach is compelling. He advocates for going big, not small. Instead of buying single-family homes or small buildings, he suggests purchasing large apartment complexes or mixed-use developments in high-growth cities. Think about international markets like Dubai, London, or Toronto, cities with high demand and limited supply where you can generate substantial rental income. Cardone's strategy also emphasizes taking action. While others may be hesitant or waiting for the perfect market conditions, Cardone pushes investors to make moves and scale aggressively. This mindset is essential in international real estate, where waiting for the perfect moment could cost you valuable opportunities. Zell is a billionaire investor known for his focus on commercial real estate. Zell's strategy is centered around acquiring assets that generate reliable cash flow while avoiding the volatility of speculative investments. Zell believes in a buy-and-hold strategy, but with a focus on income-producing properties. His mantra is, real estate is not about buying and selling, it's about holding assets that produce income. Zell prefers to invest in multifamily properties, office buildings, and commercial spaces that provide steady rental income over time. When investing internationally, Zell's approach is practical and grounded. He looks for markets with stable economies and a strong demand for rental properties. Emerging economies in places like Latin America or parts of Asia could benefit from Zell's strategy, where cash flow is the primary goal, not speculative growth. Zell's advice to international investors is clear: focus on assets that will provide consistent returns, even during economic downturns. If you're considering international real estate, look for markets with strong demand for rental properties, where people are willing to pay for quality housing or office space. Jorge Pérez is best known for his high-end real estate developments, particularly in Latin America and Florida. His company, the Related Group, has developed some of the most sought-after luxury properties in places like Miami, Buenos Aires, and Sao Paulo. Pérez's approach is focused on understanding local dynamics and building properties that cater to the desires of the local market. Pérez believes that real estate is not just about property, it's about understanding the people and the market. His strategy involves understanding the culture and the economic environment in which he's investing. By focusing on luxury and mixed-use developments, Pérez has managed to tap into the high-end market across different regions. For international investors, Pérez's approach emphasizes market research. He advises investors to focus on markets where there is demand for luxury properties or where urbanization is rapidly expanding. International cities like Miami or Mexico City, with growing middle classes and urban development, offer opportunities for high-end residential and commercial properties. Pérez's emphasis on understanding local markets is critical when investing abroad. To succeed, you need to do thorough research, understand the cultural preferences, and target the right property types in the right markets. So, what's the takeaway from all of this? The strategies from these 5 real estate giants, Warren Buffett, Robert Kiyosaki, Grant Cardone, Zell, and Jorge Pérez, have one thing in common: they work. Whether you're focusing on long-term growth, Buffett, leveraging debt for rapid expansion, Kiyosaki, going big with multifamily investments, Cardone, focusing on stable cash flow, Zell, or targeting luxury markets with local insight, Pérez, each strategy can be adapted to your investment goals. The key is to pick the strategy that aligns with your objectives and the markets you want to invest in. The world is full of opportunities, and with the right approach, you can build a successful global real estate portfolio. If you want to succeed in real estate, it's time to think like the giants. Use Buffett's wisdom to find stable, long-term investments. Leverage Kiyosaki's strategies to expand rapidly. Take Cardone's 10x mentality and scale aggressively. Follow Zell's focus on income-producing properties, and learn from Pérez by understanding the unique dynamics of the markets you invest in. The strategies are clear, actionable, and designed to work in international markets. Start today, and watch your real estate empire grow. Want insider real estate investing tips? Subscribe now and grab the game-changing info in the description.